All right, guys. So sorry about that. Welcome back to chapter 10.3. Now, this actually ties in chapter 9 as well as chapter 10.1. All right, we got to take a look at how we would spend our cash, or how we would, write our own checks, or deposit our own money. Now we are also looking at, and we also saw in chapter 10.1 what happens when we're constantly receiving money and then it faults on us. So this is kind of the concept where we're looking at the bank. All right, what do we do at the bank? We're constantly depositing money in, depositing checks in, and we're constantly writing checks out. Now, with this concept, we have to understand that what a bank reconciliation does, it's a perfect measurement to be able to compare and contrast your transactions. Okay, so let's go ahead and talk about this. So again, when we talk about the idea where bank reconciliation does is essentially it's another way for someone else to keep track of our transactions, right? The most perfect way we will be able to see that is through your bank statement. Okay, so again, there are full few rules and regulations on how things work, especially when you're dealing with either depositing or whether you're writing checks out, is that you have to know that with a credit card, sometimes it will go through, sometimes it takes about 24 hours for it to go through, especially on weekends. If you deposit a check, it won't clear until the following Monday, or vice versa. If there's a holiday on Monday, then it won't clear until Tuesday. And with that being said, same thing with writing a check. Sometimes it doesn't clear right away because ultimately the person who received the check needs to deposit in their bank for it to clear out on our end. So with that being said, this is the reason why we have a bank reconciliation, is because we need to make sure that our transactions hold up true. Did we do this? Did we do that? Did I write this check out? Did they clear it? Right? Did I deposit this check? What's my current balance in my bank account? All right. So when we talk about that, of course we talked about checks, right? And we need to understand that it doesn't clear right away. Especially, there are lots of factors that can happen, especially when someone gives you a faulty check. So again, you need to have all of those 5 things to be required for a check to be even valid. But most importantly, this is very, very, very important, especially when it comes to the date. Now, oftentimes, when you send a check, you always send it with a future date. You never send it the day of, or timestamp it to make the check available the day of, that the day you print it. Absolutely not. You're always most likely going to have to print it a few days ahead, because you don't know what happens between from the check getting from your place all the way to their place, right? Anything can happen. Anyone can intervene, and anyone can cash it out right then and there. So oftentimes, checks are usually available. They kind of predict if I'm going to send them a check. Usually, what happens is it won't be available until either anywhere between 3 to 5 days. But also, we have to assume that maybe mailing them the check could take 3 to 5 days. So with that being said, you want to make, that's the most important thing, is when you deposit your check, it needs to be available the date that you deposit it for. So for example, my paycheck, right? I won't be able to cash it out even if I receive it today. I won't be able to cash it out or even deposit it until tomorrow. I'm sorry, until Friday. Wait, is tomorrow. So, anyways, with that being said, so there are a lot of loopholes or a lot of things that constrain, especially when you are writing a check. Oftentimes, especially when we're dealing with bank reconciliations, we often see that sometimes when people do business, they don't do business very well, and they end up writing a check when they knew, or they wrote too many checks that day that they didn't look at their account balance, and they end up writing you a non-sufficient check, right? That's what an NSF stands for, non-sufficient check, meaning that they didn't have enough money in their bank. And that goes for both ways too. If I write an NSF check, then the person who tries to deposit it will get their money bounced back. So with that is one of the reasons why we also need to look at our bank statement, because we need to double check, what has the bank charged me for trying to deposit a non-sufficient fund? You often will get charged a hefty fine, and especially if you over withdraw money. Now, there's also protection plans that you can sign up for at a bank, where they allow you to cover your expenses. Okay, so if you do end up writing a faulty check, they'll end up paying for you, but you get fined on top of that. So there's also rules and regulations on when you are doing that. And I can tell you, my bank is awful, because every time you withdraw and you overdraw, it's $35. And every day that it's still overbalanced, they charge an additional $35. So at the end of the day, if I don't put the money back in there, they're just going to keep on going and charging you that $35. Okay? And same thing too, they will oftentimes, if you deposit a bounced check, they will charge you, because it took them the convenience to process the check, and they said that this check doesn't work, so they're going to charge you. And it's, as awful it sounds, it's like, why? It wasn't my fault. But that's the rules of that. Okay? So, of course, when we are dealing with a bank reconciliation, there are a few things that we need to check as well. The first thing that you should have is your check register, okay? So your check register, again, it's like your checkbook, right? It allows you to keep track of your checks that you've written, the date that you've written it out to, the amount that it's written for, and obviously who you decided to send that money to. And of course, the most important thing is you have a check number, right? Best way to keep a track of your transactions is by having some kind of sequence number. So in this case, as you can see, I have a whole bunch of checks right here, stemming from check number 125 all the way to 133. Now, there's also even more rules when it comes to writing a check out. You oftentimes never want to skip a number, because that could be viewed easily as fraud, right? Oh, you're missing a check number because someone probably wrote it out for themselves. Yes. Sometimes, oftentimes too, whoever's responsible to submit the payment or to mail out the payment, they might accidentally keep it in their desk by accident, because they were busy doing so many things that that's the one thing that they forgot to do. So then you'll see holes, or you'll see check numbers missing. Now, oftentimes when that does happen, you either have to find where that discrepancy is or where that check is, because again, the most important thing about recording your transactions is making sure that there's a proof of a transaction. If you're missing that transaction, you already automatically know something is wrong. Someone either took the money, someone took the check, never deposited, XYZ. Okay? Now, oftentimes also, in case you accidentally wrote a bad check, or not a bad check, sorry, excuse me, or if you end up writing a check with the wrong amount, and usually you would send a new one, you would never ever tell them to deposit it and we'll send the remainder. No, usually we would void the check. That's always best. You're gonna void the check. All right, rip it up if you have to, but at least you have recorded that you did intentionally have a check, but it never cleared because you voided it. So those are a few rules and things that you have to know too. Now, of course, with that being said, another thing that you need to have is your bank statement. The best bank statement will be always the one that happened is the last one from your last month. So in this case, every time I do a bank reconciliation, right, usually you should get your bank statement, and it's usually entailing any transactions that happened that month. So it will give you a beginning balance as of the first of the month, and then it will give you a new ending balance for at the end of the month. Okay. So again, here are a few terms and technical terms. NSF, which we talked about, which is a non-sufficient fund. EFT is electronic funds transfer. So we kind of briefly talked about that, right? It might be easier to send money directly from your bank to the other person's bank, or et cetera, et cetera. You also have ACH. ACH stands for Auto Clearing House. Now that is primarily used when customers or whoever send money back through the EFT train. So if they are sending you money directly from your bank, from their bank to your bank, of course there's also some cool things and nifty features. You can actually charge a convenience fee, so there is a percentage that you can collect as well. All right, but usually, typically, your bank reconciliation or your bank statement, again, will have the will basically reflect what has happened within that month. Okay, so it will give you a list of all the checks that have cleared. It will give you a list of all the deposits that you've made, and it will give you all the bank fees and service charges that they've charged, as well as any interest that you've collected. All right, so this is where when I was talking about earlier, when you write a check out, what happens? Sometimes it takes 2 to 3 days to clear. So if you generally write a check towards the end of the month, you can expect that that check's not going to clear in your bank. So therefore, you need to hold that money back just to make sure that that you know that you're pending on that transaction to clear. Oftentimes too, it's not you. When we talked about this before, right? When you send a check is good for 6 months. So that means you can be holding on to that check for as long as it's 6 months. All right. And with that being said, then that check will never clear until then. But oftentimes when that does happen, you're going to have to actually call whoever you wrote that check for and, double confirm with me that they actually received the check and that they actually deposited it. Because oftentimes, like I said, when you guys collect checks or whatever it is, or we collect our deposits, you need to go to the bank and physically deposit them. Okay, they can't be sitting in your drawer. Your money's not going to go into your bank account automatically. All right, so you have to physically take it to the bank. So that's where the checks that you've written is going to come into play, because again, we talked about that sometimes it takes 2 to 3 days to clear, or on the other side that you sent the check to, they never deposit it in their bank. All right. Same thing with deposits. Nowadays, with a vast, technology nowadays, right? Deposits are almost instant. But let's say you are depositing money, if you go to your bank or your ATM, it's 7 o'clock and you decide to deposit through the machine, you can expect that it won't clear until not the following day, but it could take the whole day to process it. So things like that, or even like I said, when you deposit a check, sometimes if you do it on the weekend, it will not clear until Monday or Tuesday, right? So making deposits can also be a reason why it doesn't show up. Okay, so that is what we're going to be doing today. We're actually going to be comparing our check register, right, with our bank statement, as well as our cash ledger. All right. So those are the 3 things that you need in order to successfully complete a bank reconciliation. And again, bank reconciliations are normally done at the end of a given period, usually monthly, because you get a statement every month. So it's actually pretty good and also good accounting practice if you were to do it every month anyways. You never want to start the month with money that you're not sure you have or not. So that's a good way to start too, is to make sure that your check account or your cash ledger, whichever ones that reflect is supposed to be reflecting your bank account on our books, matches whatever is on the actual bank statement. So again, a cash ledger, right, is basically where we hold our transactions. This is our books, and we keep track of how much money we have. Whether it's we received a deposit, whether we spent money and wrote a check out, or whether we need to deposit our cash sales, right? You need to be able to do all that stuff, and then this is an example of a ledger, which we will talk about in a couple weeks from now. All right, when we dive straight into the class project. Ledgers will be your best friend. I will tell you that. Okay. So again, even if if it's necessary, you should always double check your cash ledger before even writing a check out, just to ensure that you even have enough money in the first place. Okay. So with that being said, here are a few things that you have to compare when you're doing your bank reconciliation. You need to consider 4 things, okay? On the bank's perspective, you need to obviously have your ending balance that appears on your bank statement, right? And you're going to add any deposits that have not cleared yet, right? And you're going to subtract any checks that have not cleared yet. We call those outstanding checks, all right? You've written them, but they haven't cleared yet. And then, of course, you're going to calculate all of that to get your new ending balance, all right? And then when we look at our cash ledger side, we need to consider what our ending balance that we wrote in our books for. We're going to add any interest or any auto clearinghouse, anything that is something that increases your money flow in your bank, because us as a accountant, we're not going to know what the bank charged us or what the bank has collected us. We need to update our books with that information, okay? And then third, we need to subtract any fees or any charges that the bank has charged us. So again, we have no clue what the bank is going to charge us, right? So we need to update our books with that piece of information. And you're going to calculate it to get a new ending balance. Now, as I mentioned, when we're dealing with the cash ledger, right? We want to know what the bank knows. Okay, so if we're doing just the cash ledger, right? We want to know what the bank knows. The bank knows that they collected interest from us. They also know that they charged money to us. All right? So when we do the bank side, what does the bank not know? What do we know that the bank doesn't know? They don't know that we made all these deposits, and they don't know that we wrote all these checks. So that's the concept behind there, is understanding when you're dealing with each side, which we're going to compute both sides, because at the end of the day, the most important thing is your ending balance in your bank needs to equal the ending balance in your cash ledger. If it does not balance, you're missing something. Okay, so that's the rule here. All right, so let's go ahead and take a look at an example. So here I would give you a table that looks just like this. Well, maybe not like this, but similar. Okay, you're gonna have a bank side and you're gonna have a cash side, right? And then of course it's gonna have little placeholders, or gives you little little sections that you can fill in yourself. So the top one is going to be obviously your ending balance. So in this case, I'm going to go ahead and do my bank statement first. All right. I'm going to go ahead and determine what was my ending balance as of that month. So in this case, I'm looking at May 31st. I don't even think of 31st of May. All right. Anyway, so May 31st, we're going to be checking out that my ending balance in my bank statement is going to be $9,446.40. So I'm going to go ahead and place that information right there. Okay? Now the next thing is it says it's going to add any deposits that are in transit. Okay, so deposits in transit meaning you deposited the money, but it hasn't cleared yet because it's still being processed. So let's go ahead and this is where we're gonna take our cash ledger and we're gonna compare our bank statement because we're gonna see which information cleared. So as you can see here, I'm focusing on just my deposits here. Oftentimes when you have deposits, you'll get deposit slips. So if you place it in your ledger, good for you. If you don't, then, you just have to go by the date and by the amount that has cleared. So here, the quickest way for me to be able to do this is I'm actually going to count how many times I made a deposit. All right. So in this case, 1, 2, 3, 4, 5, 6, 7. I made a total of 7 deposits. And let me see how many actually cleared. 1, 2, 3, 4, 5, 6. Only 6 out of the 7 deposits I've made actually cleared. So your first bet is it's probably going to be the last one that we've deposited because, again, if you deposit too close to the end of the month, oftentimes it will not clear until the following month. So I'm going to assume, let's check it out. My deposit on 5/30 for $254.52, or in this case, I recorded my deposit number. Did deposit number 4,427, did that one clear? Let's double check. You got 21, 22, 23, 24, 25, 26. No. 27 did not clear. So therefore, this amount right here, it's still in transit. So I'm going to go ahead and take that $254.52 and plop it right there. And usually you'll be descriptive, right? You'll say deposit number 4,427 has not cleared yet. And you pop it right there, okay? Now, you can do either or, but I think it's just easier if you just do it at the end instead of calculating it right now. You don't need to solve for this section right here. You don't need to take your ending balance and add your deposits right away. It's optional, but just know that once you get that new balance, you're going to subtract out your outstanding checks and then you get your new balance. But I like to do it all in one go. I rather collect the information and then just calculate straight through. So in this case, I have $254.52. That is going to be a deposit that is outstanding. All right. So the next question is, I'm going to look for a check that has not cleared yet, right? I'm looking for my outstanding checks. So here, the best way to be able to look at this is your check numbers. Okay. So here I see that I should have 2, 4, 6, 8, 9 checks total written. And here 2, 4, 6. Only 6 of them have cleared. So therefore, I need to go ahead and look and see which checks have cleared and which one hasn't. So I'm going to double check here. Check number 125. Yes, it's there. Check number 126. Yes, it's there. Check number 127, 28, 29 are all there. And then, boom, I have check 130 missing. All right. I also have check number 132 and 133 missing. So what I'm going to do is I'm going to take all those 3 numbers because those haven't cleared yet. Either the person has not deposited their check in to take their money, or in other words, it could be pending because it's pending authorization. Okay. So here you go. I'm gonna know that check number 130 for $846.52 plus my 1125.22 plus my $245 are going to be outstanding. And of course, here is where you can go ahead and add this up, because instead of actually having to subtract every single one, it could be easier if you just lump them up together and just say your total outstanding checks is going to reflect $2,216.96. All right. Now, this is where I can calculate my new adjusted ending balance. So I'm going to start with my top number here. If I started out with $9,446, I'm going to add the $254, and I'm going to subtract the $2,216. And now, then we get a grand total of $7,483.96. Okay, so that's just completing one side. Now I'm going to go ahead and move on to my cash ledger side. So first thing I'm going to start off is with my ending balance that I've recorded in my books. So again, usually your cash ledger, you would know your ending balance by going all the way to the bottom of your ledger, and it should be whatever's on your debit or whatever credit side. Usually, and then when we look at our ledgers, you'll see that there are two debits and two credits. Your debit and credit is going to be what you journalize in your journal, and then your normal balance side is going to reflect what it currently stands for, the balance in your bank in this case. All right. So if I follow my line along here, the last thing I wrote was check number 133. So my total current ending balance in my cash account or checking account, it should be $7,338.96. So boom, I plop that on right there. All right. Now the next thing I'm going to do is I'm going to add all my interest and all my ACH, because again, your interest is something that it's going to be considered income, right? And we talked about interest, right? It could be whether you are collecting interest off of a bank card, or not a bank card, sorry, a bank bond, or maybe you're just collecting interest off of just any, like if you have savings or something, you collect interest. And then we talked about auto clearinghouse, right? That happens when other people send you money and then they get charged the convenience fee for that. So here I'm going to go ahead and add my interest and my auto clearinghouse. So in this case, I got $15 of worth of interest and I got $215 worth of ACH. So I'm going to list that here, and of course if I add 15 plus 215, that's exactly 230. All right. And then now I'm going to less any fees. All right. So here my fees should be somewhere on my bank statement. Usually they're located at the very top. But they should tell you had a service fee. You even encountered a return check fee. So that's bad. All right. So here we have $20 and we have $35. So here I'm going to go ahead and locate it there. And that means, $50 and $35 to give me a total of $85. And now we can do our calculation here. We're going to take our ending balance. We're going to add our interest, so $230, and we're going to subtract our fees for $85. And my ending balance, or my new adjusted ending balance, should be $7,483.96. And we are successful because our bank matches our cash ledger. Okay? And then when you start your book for the next month, this is going to be the number you're going to reflect in your in your bank account, because you've pulled things that you need to be aware of is this is your new ending balance, because you're going to journalize this and put it in your ledger that you've charged the bank fees, bank services fees, and you've also accrued interest. So your bank should reflect this when we make our journal at the end of the day. Okay. So that's all I really wanted to teach you as far as chapter review. Now, for bank reconciliation, the best way that I've created was, if you're dealing with your bank, you're doing, okay? You got your deposits in transit and you got your outstanding checks, okay? Well, if you're dealing with your cash, you're dealing with ifs, your interest and your fees, okay? So do's and ifs. Banks are do's. Cash is ifs, right? And again, yes. Any questions in regards to bank reconciliation? Okay. All right, so let's go ahead and get started with the exercise, exercise 1. I should say problem 1 when you open up the file. So here we have copies of some checks that, we just kept copies of our checks. And then as we scroll down, we have our bank statement. And then as we also keep going down, we have our cash ledger or a checking ledger, whatever you want to call it. And underneath that is going to be our check register as well as our deposits slips place. Okay, and then here is the table I was talking about. More or less the same, just not colored. All right, so let's go ahead and do problem 1 and let's figure it out. Now, I'm going to tell you this, just a little fun fact, I guess, or key factor, is that if there are many other factors that could affect your bank reconciliation, but of course, I just need you to know the very basics or the very minimal on how to do it. But the reasons why we have copies of our checks is because what if we accidentally wrote the wrong number in our checks and we recorded it wrong in our books? So that's one factor there. Oftentimes it's very minimal that the bank will make a mistake, but always without a doubt, your bank should most likely be always accurate. Okay, little fun fact there. So here, of course, I have copies of our checks because we want to make sure that these ones are the ones that actually cleared through it. But we also have our check registers as well to be able to determine that. Okay, so with this, what side do you want to start with? You want to start with cash, the cash ledger side. Okay, so first thing that we have to do is we got to recognize what is our ending balance in our cash ledger. So as you can see, right here is my cash ledger. Okay, what is my total ending balance in my cash ledger? $775. So here on August 31st, I actually wrote out a check for $20. So my new ending balance is now $775. So I'm gonna go to my cash side right here, and I'm gonna indicate that it should be it should be 775. 775. All right. Now, when we're dealing the cash side, what are we adding? we're adding our interest. So we can find our interest slash auto clearinghouse on our bank statement. So in this case here, it's located at the very bottom. So how much interest did I collect and how much auto clearinghouse did I collect?
300 interest.
300, is it 300 interest?
No, it's gonna be 50 plus ACH.
50.
Yes, it's 50, and then auto clearinghouse is going to be 250.
Yeah, it's gonna be 300.
Yes, it's going to be in total of 300, but make sure you don't you have to categorize it, because when you categorize it, you also are going to journalize it separately. You're not going to journalize it together. Okay, so here you're going to add auto clearinghouse. And we're going to also add interest. So again, we said that it was $250 for auto clearinghouse and $50 for interest. Bringing my grand total to be added is $300. Okay. All right. Now, what do we need to subtract on our cash side?
Fees.
Fees. So usually it's going to be at the top, like I mentioned. So I got charged a service charge and I wrote an NSF. So they charged me $20 for the service fees and they charged me $10 for my NSF. Okay. So I'm going to go ahead and bring that down to my little window here. So I'm going to write service as our charge and NSF. All right, 20 for service, 10 for NSF. All right, bringing me a grand total of $30 I need to subtract. All right, so what is my total new ending balance? $10.45. All right. Now we can't stop there because we have to do the bank side. So let's go ahead and determine our ending balance in our bank. So let's go up to my bank statement. What's my ending balance for my bank?
1,000.
Yes, 1055. All right, so scroll down. So 1055. All right. What do we have to add in our bank?
Deposit income.
Yes, so here we're going to take a look at our deposits, receipts and deposits, right? So on the deposit side, I have 1, 2, 3, 4, 5 things that were deposited. All right, go up to my bank. How many deposits actually cleared?
4.
4. So rule of thumb is you're going to automatically associate what was the last deposit you made. So in this case, my last deposit I made was on August 30th for $30. Now let's look. Did my August 30th deposit go through?
No.
No. So that's one thing that we have here. It's a quicker way to be able to locate things, okay? So add. You're going to add the deposit, okay? And because I only have one number here, it is for $30, okay? So then what do I need to subtract from my bank reconciliation or from a bank?
Outstanding check.
Outstanding checks. So here, let's look at my check register. I have check number 101, 102, 103, 104, 105, 106, 107, and 108. Let's go ahead and take a look at my checks here. Which one actually cleared?
101, 102, 104, 105, 106.
107 also cleared.
It's 107.
It's just I put NSF on the side because what happened is we got charged for that because we didn't have enough money in our bank, but it didn't charge us back for the same amount, so they pushed forward for it. Okay. So which ones did not clear?
103, 108.
103 and 108. So I'm going to go ahead and go back to my check register. So 103 was for $20 and 108 was for $20. Okay, so I'm going to go over here and add in 103 and 108. They were both for $20. So therefore, in grand total, I should have $40 in outstanding checks. So let's go ahead and calculate this. What is my new ending balance in my bank?
$10.45.
1045 is the answer. And look, our bank matched our cash. All right? Any questions in regards to this? This is the easiest one. All right? So let's try a little harder one. Okay? So here we are. We're doing problem number 4. So again, we have copies of our checks here. Okay? We have our bank statement. We have our bank statement, and we have our cash ledger with our check register and deposit register. All right, and then of course, right, I have my table here. So what side do you want to work on first? What side do you want to work on first?
Cash.
Cash. You want to work on cash first? Okay. So, let's take a look at our cash ledger. What is our ending balance in our cash ledger?
23,995.79.
23,995.79. 23,99. Do you say 9?
79.
Okay, 995.79. Okay. What's the first thing I need to add?
Interest.
Interest. So let's go to my bank now. Okay. So here I have an auto clearinghouse and an interest I've collected. How much interest have I collected?
1,237.22.
1,037.22 and ACH for 550. So 1237.22. Okay, so here interest A/CH 1237.
22.
Okay. Go ahead and add that up so we can have a little little balance over here.
1787.22.
1787.22. Okay.
Yes.
Good. And then lastly, what is something that I have to subtract from my cash side?
Service charge.
I have to calculate for my service charge. Yes. What else happened?
fees, other fees.
Other fees. And here, I have an actual returned check for number 195. So I got this number bounced back. Right? I got my check for $850 bounced back. So in this case, I have to add it back to my cash ledger. So 50, 10, and 850. So here I got service charged. I got a return check, and I have number 195. Okay, so my service was charged me $50. My return check was $10, and my check that got returned was $850. So what's my grand total here?
910.
Okay, so let's go ahead and calculate that. So what's my new ending balance going to be in my check ledger, cash ledger?
$24,872.97.
Okay, sorry. What was that, Dan? So 24?
872.97.
Okay. All right. Well, we can't stop there, right? We have to make sure that our bank side has also agreed. Okay. So let's go ahead and take our look at our ending balance in our bank statement. So ending balance here. What is my ending balance in my bank?
24,594.72.
24,594.72. $24,594.72.
72.
Thank you. Okay. So what is my first thing I'm going to be adding?
Deposits.
Deposits in transit. So let's take a look at my deposits section right here. I have 1, 2, 3, 4, 5 deposits I've made. But in my bank, what is it? How many deposits actually cleared?
4.
Only 4. So let's see which one is the one that that hasn't cleared yet. It should be for the 400. Because the last one I deposited was for the 1670. 1670 is right there. So our automatic assumption is that deposit on August 31st did not clear for $400. So I'm going to add that in here. So DEP. And because it's the only one, I'm going to place it right there. $400. Okay. So then what is next? I have to see how many checks haven't cleared yet, right? So let's take a look at my check register. How many checks actually cleared? Or sorry, how many checks have I written actually?
6, 7, 9.
1, 2, 3, 4, 5, 6.
11.
11. Okay, so let's go ahead and look at my my bank statement to see how many of those checks actually cleared.
1, 2, 3, 4, 5, 6.
Only 6 out of 11. So that means we have to go ham on these and make sure that these checks have actually cleared. So let's take a look. Okay, did check number 846, 872, 873, did all those clear?
846 did not.
846 did not. Okay, where are you? 846 did not. Okay, so that's definitely something we need to keep in mind. What else shouldn't have cleared? So we have 875, 878, okay,
880,
880, and what else?
881.
And 881. So let's go ahead and add that information down below. So we have a total of 5 checks. I need to add a couple more. So we have number 846. We have number 875. We have 878, and we have 880, and we have 881. All right. Now let's go ahead and calculate all those totals. So 846 was written for 320. 875 was written out for 49.21. $49.21. Number 878 was for 275, and then number 880 was for 401, and then lastly 881 was for 186. I didn't even catch those last two numbers. 50. Okay, so how much is in grand total that my checks did not clear?
1,231.71.
1,123.
No, 1,231.71.
Okay. So then let's go ahead and calculate my new ending balance. So what's my new ending balance?
23,363.01.
All right. Now let's take a look. Did our ending balance in our bank match our ending balance in our cash?
No.
No. That means we need to find another discrepancy. So where do we even start? Well, that's the part where you're gonna have to figure that out. So in this case, let's double check our check register and our cash ledger. Okay, so let's go ahead and go through each one. Let's see. Our first thing that we have here is we should have wrote a check for $320. Did we write a check for $320?
Yes.
Yes. Okay. Then the next thing that happened was we should have received or deposited $340. Okay, so let's see. Did we deposit $340?
No.
No. In our records, we wrote in our ledger, cash ledger, that we have $340. But in my deposits, it's for $430. So let's go ahead and see how much the bank actually cleared, because again, the bank is most likely right. How much did the bank clear?
430.
$430. So what's my discrepancy between 430 and 340?
$90.
$90. So in this case, the bank knows that I deposited $430. But what I wrote in my books is it was actually for $340. So where do you think I should place this information?
Bank statement.
Why would the bank statement? Was it the bank's fault that I wrote for 340 instead of 430? What does the bank recognize?
The bank recognizes 430.
Right. Good. So is this an error on the bank's end or is it an error on my end?
On our end.
On our end. So therefore, you're going to have to either add or subtract money. So in this case, I am short by how much?
$90.
I'm short by $90. So that means I have to add more money to my cash ledger because that's how much that I've actually deposited. So I'm increasing my amount of money by $90. So in this case, I'm going to place it right here under my cash ledger. And I'm going to say, what do you want to say here? Cash, right? Should be, actually, no. Deposit, wrong. Deposit. When did I deposit this?
August 4th.
August 4th. So I'm going to go ahead and write deposit on August 4th, and it's going to be for an additional $90. So therefore, what is my total going to be reflected here?
$268.22.
268.
0.22.
How is that 268?
No, it's 1877.22.
Oh, sorry.
18.
Oh, sorry.
77.22.
77. Okay, sorry, my bad. 77.22.
Yeah, it's 87. Sorry.
Okay, that's fine. So it's up to you. You can make your adjustment here. So now that I have that $90 extra, so what is my new balance going to be now?
$24,963.01.
Okay, so here, at least we're getting close because we got the 6301 going, but we're off by a lot of money. So let's go ahead and continue with our finding our discrepancy. Okay, so we found that one. So what happened next? Let's see what happened. What happened on August 2nd? We wrote a check for $50. Is that true?
Yes.
Yes. Okay. What else has happened here? On August 5th, we received $501 and $388. So we must have deposited that money. So let's see. Did we deposit that?
Yes.
501 and 388 for 890.
890. Yes.
Perfect. Okay, so it's there. What else happened? Let's see. We wrote another check for 150 and another one for 20. Let's look here. Did we write one for 150? Yes, we did. Did we write it for 20? Yes, we did. Okay. Now, next one here is we should have deposited 431 plus 850 plus 545. Let's take a look at that. Let's see. We have the 431 and the 850 right here, which we deposited for a total of 2181. And we said the 545, it's right here. Okay, but we actually added a bunch of other ones in there too. So let's see. We got the 545, okay. So then what has happened next? Did we write a check for 4921 and 200?
Yes.
4921 and 200. Okay. And then let's see what happened next. After the 545, we have 500 and 625. Let's see, did we clear those or deposit those? 545, 500, and 625. Yes, we did, and we deposited them all in one go for the 1670. Okay. All right, so doing good so far, so we haven't found a discrepancy. So then on August 28th, did we write a check for $560? Let's see. $560. Yes, we did. All right. Now let's see what happened next. $560. Did we record our deposit for this $575 plus our plus 625? Let's see. Did we make a deposit for that?
625 is there.
625 is there, but I'm talking about the five. Let me see. What was it? 575 and another 625. There's two 625s.
No.
No. We missed this right here. Because in my recording, I only have my last recording or deposit for the $400, which is right here. So that means I have cash on hand. Now, does the bank know that?
No.
No. So the automatic assumption is we will deposit to the bank. So in this case, I have 575 and 625. So let's go see where I could place that. So in here, obviously the bank doesn't know that. That's cash on hand that I have, right? Cash, let's see what the dates are for those. So I have cash for 575 for August 28, and then I have one for August 29 for 625. So cash for 828, and I also have cash for 829. So this one was for 575, and my cash right here was for 625. So in grand total, what is going to be my total cash that I need to add to this section right here?
1125.
1125
Yes.
plus the 400.
Oh, plus the 400. 1525.
1525. And now go ahead and recalculate it. What did you say, Dan?
1600. That should be 1600, right? Is it 575? We're missing the 75.
Yeah, it's 60.
Oh, yeah.
Okay.
1600.
1600 even?
Yeah.
All right. So then let's go ahead and calculate your new total. So if you had a total 24,594,72 and you added 1600 and subtract your 1231.71, what is your grand total that you have here?
2496. 963.01.
And now do we match our bank and our cash?
Yes.
Yes. Yes, you do. So, in a real life scenario, yes, that actually does happen. But of course, another thing that we also have to know is I'm not going to throw that much information at you. All I need you to know is your deposits, your outstanding checks, your interest, and your fees. That's all I need you to do. I'm not going to throw in, oh, you have off balance or cash on hand on this side and cash on hand on that side. No, I just want to make it simple and easy just because, again, the test is only supposed to be 4 hours long. And if it took us that long to solve for one question, then you can only imagine. All right? So with that being said, does anybody have any other extra questions in regards to chapter 10.3? This was a long one. Okay. All right. If you don't have any questions,